All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Challenge here this afternoon. Not going to make any changes. We have Walmart, we have Microsoft. Walmart kind of being a dud today, as it was yesterday, but still within all the parameters. Barely has a gain. The stock does have a gain, here on it, but going to take that into the close into tomorrow. Now tomorrow it comes on to its auto exit date green, so basically, if the stock doesn't reach its price target, the 121.71, then going to have to pull it. Now, it doesn't need all that big of a day to go and hit its price target, so we'll see kind of how that plays out. Microsoft getting close to its price target is less than $2 away from it. The stock has moved, about a little more than $3 in our favor, but it has taken some time for that to happen and through some events. So we've lost some implied volatility. We've lost some theta. The option is played out exactly how the delta, theta, vega suggested when we entered it, and that I showed. But it would sure be nice to see it punch up, break out of this longer term consolidation that it has been in. He tried to break out back here in September and failed, but is coming back up off of a higher low, and I would not be surprised to see some significant upward thrust here with that. We aren't hitting the green stop here for Microsoft until what is that, Thursday, so do have a little bit more time with that than we do with Walmart. Now, there is a new trigger on the board here today, and that's Alcoa. Alcoa is triggering bullish here today. No, I'm not going to go make the trade on Alcoa simply because I don't have the cash available for it. If we do get knocked out time stop wise with Walmart tomorrow morning or afternoon, I'll take a look at getting into some Alcoa here on this 3-7 crossover that it has, but the options aren't fantastic. They're not terrible, but they're not fantastic there. But this is a stock I would not be surprised to see push up into that 23, 24 level, and maybe even revisit that 200-day moving average for the first time in a very long time here for Alcoa. All right, so that's the challenge. There are a few crossovers, things like Disney have an upside 3-7 crossover on it today, but not a trigger. Twitter has an upside 3-7 crossover, but not a trigger, due to the consolidation risk. Pepsi has a downside 3-7 crossover, but also not a trigger due to the consolidation risk. If you're looking at overvalued stocks in the market and saying, can I go short something that's really overvalued? You look at Pepsi and you go, that's interesting, right? But it has been one of the stalwarts of the market, here so far this year. All right. So anyway, that's challenging going into the close here with Walmart and Microsoft. Now, natural gas. There's this idea that's out there that as the weather here in the U.S. Starts to cool, that natural gas tends to go higher, right? And it's a reasonable assumption. We saw last November a very big rise in the price of natural gas. It rose here from the low threes to the upper fours, and did so very quickly, very abruptly. Now the rest of the year, it's been pulling on back, and it's down near its lows. And in fact, if we come in and we look at a monthly chart of natural gas, it's it's sub 2.5 here. We broke a little bit lower than that back here in 2016, but long gone are the days of 2006 and 2007, 2008, where natural gas was trying to push into double digits. And those days are absolutely long gone. But is there a play to the upside here on natural gas as we go into the end of the year? And the answer, as I look at it, is potentially, but I need to see some chart improvement, right? One of the things about commodities is they tend to get follow through. they tend to get a big move and then a bigger move, in terms of follow through. And, so far with natural gas, we just haven't seen a move, right? There hasn't been even a very initial move here with it, just a little light, up and down and all around, but nothing where we're talking about the price of natural gas breaking a key range. We saw a small rally here in August and September that has been sold off and pulled on back. But for me, I'm looking at this 240 level here on natural gas. And if natural gas is able to hold its lows here of 220 and break 240, well, now I'm a little interested in playing it to the upside. Now, easy enough. Waiting for that, it's not in play right now, so nothing to play. But how do we go and play it, right? Because if we look at something like UNG and we compare this is the natural gas ETF, and we compare it to natural gas, well, natural gas is near its lows, but it's near lows that it's seen many times. The UNG, well, it does nothing but go down. Yeah, it has these pops in it, but it pretty much goes down all the time. It has, it's dealing with natural gas futures contracts, and so there's a cost associated to rolling those contracts that essentially bleeds the ETF month after month after month every time those contracts are rolled. And if we look at a monthly chart, you can see what the ETF looks like. It is just always down. That's not what natural gas prices look like, right? If we go and we chart natural gas prices, they look very different, right? Natural gas prices are higher than what they were in 1999. UNG, well, we don't go back to 1999 since this started in 2007. But, it has been reverse split so many times to try to keep it from, going, significantly lower. So to go and buy the UNG, yeah, if our timing is perfect, sure, it's going to make us some money. We're going to be able to take advantage of it and go out and get some sort of upside explosion there to it. Two very popular names historically for trading natural gas have been Range Resources and Chesapeake Energy. Now, Chesapeake Energy is close to an all-time low, back to 1999 levels. They have just never really been able to recover from, what we saw in 2007, where the CEO was going out and essentially buying his own company's shares on margin. And was just margin, and he got margin called and was forced to sell, and we saw the stock absolutely tank here in 2008. This wasn't Lehman Brothers, it wasn't all of that. This was the CEO getting margin called on a whole bunch of shares. And, then, Aubrey McClendon, the CEO, was around, some say committed suicide, others say traffic accident, but, had to basically, management replaced, and they've just never recovered. And one of the big reasons is natural gas prices simply haven't recovered. Natural gas is being just burned off out there, in oil fields as just a byproduct because it costs more to collect it and sell it than it does to just simply burn it. And so that, weighs on, a company like Chesapeake. Can they bounce if natural gas bounces? Well, let's take a look at what happened last year. Because last year we saw natural gas bounce sharply in November, make a very big move higher in November. What did Chesapeake Energy do? Down, right? So if we're going to play natural gas higher, yeah, you know what? It went up with natural gas here in September. But man, it's a risky way to play natural gas. What about Range Resources? This is another one. But what happened last year in November when natural gas skyrocketed? Yeah, it went down too, and it has been going straight down ever since. Finally got a short squeeze here in September. Now, I say short squeeze, why? Because these are stocks that the shorts are involved in, right? They are shorting these names. They are playing for it to go down. In fact, Range Resources is 37% short. Chesapeake Energy is 14% short. So what's the play? Well, if natural gas breaks the ranges, I'm going to go look in the commodities market and I'll look at options on some of the, natural gas commodity contracts. They're not too liquid, but, they're tradable, just individually. But I'm going to have my eye on Range Resources. It is incredibly shorted. And if those shorts start to get squeezed, what's going to happen? Well, we're going to be talking about a stock that in a matter of weeks is able to put on 20 to 30 to 40% of a gain. Now, it'll probably give it up afterwards, but okay, great. Now I can go and look at that area to play. If we come and look at the Range Resources options, I can pick them up for fairly cheap, right? For fairly cheap for something that can, explode to the upside. But I will be looking for something very short term and looking about the $4 area and looking for Range Resources to pump into the $5.50 to $6 area and really kind of get a strong option appreciation there. But I'm not interested in playing it with Range Resources until I see natural gas tick up over 240. And so far we don't have that. So seasonally, yes. Does it make sense? Yeah. Is it a global market to where some of the seasonality of the U.S. doesn't matter as much? Absolutely. So there's a lot of different arguments to just kind of say, hey, you can't just go buy natural gas blindly at this time of year. But historically, it does have some seasonality. Some, it's not overwhelming, but does have some seasonality. It could do it again this year. Great. Pick something you're looking for. Pick an area that you're saying, okay, you know what? If this happens, then I'll react and go. And for me, natural gas is very simple. Breaks over 240. I'm looking at Range Resources and looking at playing Range Resources for a short squeeze. And that's simple. Right. Other than that, I'll be looking and, hey, if we get a big rally in natural gas, I'll be looking to short it. And so will probably the rest of the world, as it shoots up and, basically bleeds on down after that. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you tomorrow. Take care.